Hi, everybody. It's kind of ironic because last weekend I was very busy traveling and doing travel-y type stuff, and yet had I not mentioned it, nobody would have noticed because I had so much content waiting in the wings that I was basically ready to go and kept the pace going, and no one would have been the wiser. This weekend I have nothing but time, and I have very little to talk about. Don't turn the video off quite yet. I will have something useful to talk about in a moment. But as I said on my Tasty Trade show on Friday, I feel like I'm a botanist who's walked into the middle of the Sahara Desert, and I've got a party with me, and I've really got nothing to show them or talk about because of the way this market is right now. I mean, just let's look at the spider here to see what I mean. For one thing, if you look at, for example, where we are on a volatility basis, you can see, I'll even go to an entire year. Let's do 1 year, all data. So you can see here, this shows the implied volatility rank. I mean, look at this. This is just sad. So here we were just pegged. Things were as volatile as they can get. Dine, death. Down here we're at zero. You know, obscene. Bleep, explicit obscenity here. And another simpler way to look at it is even just looking at the daily bars. Look at here. Take note of this range. Look how large it is, and we get this and this and this and this and this motion. Less, and we're dying to here. Look at this. Is pathetic. Look at this. Look at the size of the body. You know, almost no difference between the open and the close. The entire day's range, get out your electron microscope. Holy God. I mean, this is what happens when the government controls the market. It is non-organic. It is not volatile. It is boring as hell. I mean, there are times when you get an honest-to-goodness bull market. Growing economy, growing jobs, like, say, here. Or even better, just take this portion. 95, 96, that's actually a market in action, right here. Just steady. And, it gets overheated and you get a bear market. And you do it again, it gets overheated, you get a bear market. It's kind of the cyclic nature of this. This crap, just stick a fork in it. So there we are. And what's the volume doing? Oh my Lord. You can see here. It wasn't that long ago. Just dialed back to just last month. 134 million shares traded. How about Friday? 45 million. It's pathetic. Absolutely pathetic. To say nothing of days like these. I mean, when there's 717 million traded, that kind of thing. You can see here, though, that everything, by all measures, just death. But doesn't mean there's not excitement coming. So anyway, this is a very long-winded introduction to the fact that I have nothing to say. I do have some symbols to show you, though, and I'm only half joking because this market is not rich with conversational opportunities. But this weekend, I will not have my usual fire hose of content, just a few, just do 3 videos. I'm just going to share some ETFs in each of these videos. So, the diamonds, DIA, we've got this big old wedge here, which was broken, and we skirted underneath the bottom of it. You can see beautifully here, and then started to edge away from that. So, this is clearly its own dynamism and growth has stalled out. Its companion, the transports IYT, broke its own trend line back on the 4th of June And these are big trend lines. These are the big March 23 bottoms. And so that has failed. And this is actually making a downward progress, if you can believe that. Maybe the exploding fuel prices have something to do with that. The small caps have been exasperating, of course. As I've made mention, they were looking extraordinarily promising. I would say the best last glimmer of hope was back here on the 20th of April. It seemed completely poised for wonderfulness. And then this junk happened right here. It just got aborted. So this is a mess. And the thing to watch here is just this 233.75 lifetime high to see if it breaks above that or not. But that's a very messy chart. Over in Cube land, we've been ascending on this ever since the 19th. We've gone from 316 up to 341. And here too, the thing to watch is this lifetime high, 342.8. So aren't very tradable patterns on the whole. There are some others that are pretty interesting in other videos I'll show you, but the super broad market is just super dull. The semiconductors, SMH, may be a pattern forming here. Kind of indeterminate right now. It would take a lot. It would basically take a path down and ultimately a failure of this level. But that's, you know, that's like fantasy land at this point. This here, this range, should it break to the downside, that would be a fairly big deal. But we will get lots of warning about that if it should transpire. Finally, XLY, the consumer discretionary. Here too, we've got a broken trend line. We've also got a price gap at 174.44. This is pretty tradable because, for one thing, you'll know real quick if you're wrong if we cross above this particular level. And as with all these indices, it is just at nosebleed levels. So I'm going to do a couple of other videos for this weekend and one or two other odds and ends. But yeah, summertime blues, hopefully, although not even summer yet, but you know, I'm not sure what it's going to take to kind of shake the cage of this market. But I do know, just a bonus chart here just off the top of my head, I do know if you look at the VIX, we are at a level now that hasn't been seen since COVID wasn't even a thing. We've gone from nearly 90 to 15, which is just plain sad. It's just pathetic. But this line is still intact, and we could be getting ready for a really good buying opportunity on volatility here. Of course, assuming that trend line holds. So, all right. Well, that's it for this one. This is probably going to be by far the longest video because I was yammering so much at the beginning. So on we go.